Going to open up the meeting now at 6:08. Please make note of the emergency exits that are closest to you. And please silence your cell phones and join the board in the Pledge of Allegiance. At this point in time, can I have a motion to recess this meeting, the open meeting, in order to go to the audit committee?
Motion.
Second.
Winnie Canestro's first, Chris Neron is second. All those in favor?
Aye.
Aye, motion carries 6-0. I'd like to open up the audit committee now at 6:09. And at this point in time, our external auditor, Alan, Yu's gonna speak to us.
Good evening, members of the board, members of the public, and members of the administration. My name is Alan Yu. I am one of the audit partners of the firm, Collin Danowski. Our firm was appointed by the Board of Education to perform the audit of your district's financial statements for the fiscal year ended June 30th, 2024. We're also known as the external auditors of your district. The district now has 3 sets of auditors. You have your claims auditors claims auditor, who comes in regularly to audit your payment vouchers before they are released for payment. You have your internal auditors, whose focus is different from that of the external audit. They focus on the internal controls over various parts of your school district's operations. They also perform much more in-depth kind of testing. They would look at areas that an external audit of financial statements simply would not encompass. And the external audit of the financial statements are confined really to the end of each fiscal year. We perform our audits in 2 phases. There's the initial risk assessment phase. You may recall back in July when I met with you at the audit planning meeting. I've gone over some of the areas that we typically would look at from the standpoint of risk assessment, as well as testing of internal controls. After that, towards the summer or the end of summer, once the district's books are closed by the business office, that's when we would go into the district and perform the audit of the balances of your books and balances. Once that's done, then we draft the financial statements on your behalf as a non-audit service, and then come before you as the audit committee to review those audit results. The second part of that audit that usually takes place after the books are closed, as I mentioned. Okay, so for this year, the scheduling of the audit is such that we started the audit the week after Labor Day. Okay, so typically it is, it takes anywhere from 6 to 8 weeks from that point on, okay, for us to be able to generate the draft audit reports and meet with you in person. And the state does have a due date of October 15th for the audited financial statements and the reports to be uploaded to be filed with the SED. But at the same time, there is a 30-day statutory grace period, which allows school districts to file their financial statements and audit report without any financial penalty by November 15th. So over the years, we've taken advantage of that grace period, and with Amityville School District as well, and have been filing the reports after October 15th. Okay, so really it's a scheduling um, issue, if you will. Okay, when we start the audit, during the second week of September, and by then, the books are closed. Okay, your district business office does a very good job in terms of closing the books. And this year, we actually have no material audit adjustments, which is very rare. And that speaks to the strength of the person in the business office who does your books, Ms. Marianne LeBlanc. She's a longtime employee. But at the same time, it does take time for us to complete our audit process in the field. After the work is done, we do review the work, and then we start drafting the financial statements. So all that takes time, and that added to answer Ms. Canestro, your question to me from last week, and that's the primary reason. Okay, we do have a number of clients which we are still working on finalizing the report. Like this week, we're going to be releasing 3 final reports. I still have 2 more board meetings that I will have to attend over the next week or so. Okay, so those couple of districts actually will be after the November 15th deadline for them. And sometimes that's it's the process of the audit. It also depends on the shape of the books of the auditees. Okay, in terms of those school districts that will be going late, one of them is still waiting for some external report, an actuarial report from a third party that they have not received yet. Okay, so there are a lot of moving parts. It's not like my team leaves on a Friday, and then the financial statements are ready by the end of next week. It takes a lot more time than that. So I hope you appreciate you could appreciate the amount of time that it does take for us to complete the audit. Okay.
Can I just ask a question?
Sure.
Do you have any districts that submit their report on time by October 15th? And then
We do have some, yes.
when do you start that process then? In July?
Second week of August, first week, second week, third and fourth week of August.
Okay, and what are we submitting to the state by Friday? This report or corrective action?
Just the audited financial statements. The corrective action plan, the district has 90 days from the time when the final audit reports are released to the school district from the auditors to submit an approved corrective action plan. So Friday, the only document that the SED needs are the audited district financial statements, not the extra classroom financial statement, not the management letter, and certainly not the corrective action plan.
Okay, all right, thank you.
You're welcome. Okay. All right, so the district financial statements that I just handed out to you, I've changed the audit report date to November 11th. And the only reason for doing that is because, by our auditing standards, we have to obtain what we call legal confirmation. Okay, the version that you received by email from me, and then a couple of pages of typo corrections. That report was dated November 6th. Okay, with this version, we did fix some of the typo errors that I pointed out to you earlier. However, the numbers did not change. Okay, and what we had to do after receiving the initial legal confirmation letter from your legal counsel, Gercio and Gercio, is that the one that says tentative draft district financial statements. Right, the big one, correct. Okay, if you flip to page 3, if it says October 11th, that's the one I just handed out. Excuse me, November 11th, yes. Okay, and like I said, the reason is because I had to obtain an update from your legal counsel as to whether or not anything has changed since he last sent us the letter advising us of any outstanding claims pending against the district. And his response was no. So that's one of the things that our profession, the AICPA, requires us to do. So please do not be alarmed about the change in the date of the report.
How quick was that turnaround time from council to you? How quick was that turnaround time?
So the legal letter that we first received was towards the end of September. Okay, and then we tried to wait until literally the very last moment because of, again, all the moving parts. I knew I had to meet with you before I can release the report. So I contacted legal counsel on Friday, and I received his update response on Monday, or yesterday, which is the 11th. Okay, so looking at the big report, pages 1 to 3 are our audit opinion. I'm glad to report to you that we are issuing what's known as an unmodified opinion. That means it is a standard independent auditor's report stating that your district's financial statements have been prepared in accordance with GAAP, generally accepted accounting principles, and that they're free from material misstatements. Now, at the top of page 2, I do want to point this out to you. This is something that I have discussed back at the July audit planning meeting as well, under the section auditor's responsibilities for the audit of the financial statements, reminding everyone that the external audit of the financial statements is not a forensic audit. Okay, the objectives are to obtain reasonable assurance about whether or not your financial statements as a whole are free from material misstatements, whether due to fraud or error. Now, reasonable assurance is a high level of assurance, but it is not absolute. Okay, and which means it is not a guarantee that our audit that has been conducted in accordance with auditing standards required of us by our profession, as well as the USGAO, government auditing standards. It's not a guarantee that it will always detect a material misstatement, even when they exist. Okay. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, because fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. In other words, this is our disclaimer or our CYA statement, okay, as required by the AICPA. Okay, but it's true, as you might remember back in July. Okay, and I mentioned that the audit of financial statements involve testing, sampling. Okay, we're not looking at 100% of the population. Your district underwent a forensic audit after June 30, 2023 financial statements. Now, I had no knowledge of that particular forensic audit other than the report that was made available in district's website, and I have read that. I don't know how much time they've spent, but I would imagine they probably spent more time than our audit team did on auditing the financial statements. So there is inherent limitations in what an external audit of the financial statements can provide in terms of assurance. Okay. And then page 3 of the report, the very last paragraph makes reference to another report that is required by the government auditing standards. And that report is all the way in the back towards the end of these financial statements after all of the supplementary information. That government auditing standards required reports include internal control of financial reporting, as well as compliance with laws and regulations. Last year, the June 30, 2023 audit, we actually had to disclose the fact that the district overspent the adopted budget, and which is a violation of, it's a non-compliance with state law. And at the same time, there was also, also an internal controls over financial reporting finding. I'm happy to report to you that this year we did not have such a finding. So it is a clean report for the June 30th, 2024 audit. Yeah, I'll get into the finances in a little bit, but for the 23-24 fiscal year, your district did not overspend the budget. You spent a lot. You spent 99.5% of your final budget but you did not overspend your budget. So as a result, there was no finding to be reported in this particular report this year. The format of these financial statements are prescribed by the GASB, Governmental Accounting Standards Board, the equivalent of the FASB in the commercial world, as well as the NYSED, the State Education Department. Okay. The first section of the financial statements are called Management's Discussions and Analysis. We did assist the district in drafting the financial statements. So if it looks like a boilerplate, that's because it came from our template. Okay. However, the information put into the financial statements are based on information that we collected while performing the audit. This year's process is a little bit different, okay, in that I did not share the draft financial statements with administration beforehand. Usually, that's the usual process. We would have gone over the draft reports with your business official before releasing the report. But this year, I thought I would, because of the interest of time, since the board has been waiting for the report, I didn't want to delay any longer, and I released the report at the same time to both the administration, Dr. Talbert and Ms. Buatsi, as well as members of the board. Okay. So with these districts, local government financial statements, the GASB require local governments, including school districts, to present not only the financial statements of your funds, okay, your general fund, remember, of course, your general fund is your main operating fund. That is the fund that every year school districts budget for. Okay. In addition to your general fund, you have other governmental funds, special aid fund, school lunch fund, school food service fund, capital projects fund. All those are called governmental funds. And the books that your business office maintains on a daily basis are the funds. In addition to reporting the financial statements of the funds, which are prepared based on some accounting basis we call it modified accrual basis accounting. It's kind of like modified cash. The GASB also requires you to present what we call district-wide financial statements. Okay, there are two statements presented. One is called statement of net position. Think of it as a consolidated balance sheet. Okay, and then there is a statement of activities. Think of it as a consolidated income statement. However, it's more complicated than that. Because there are other elements that the GASB requires local governments, including your school district, to report on these district-wide financial statements that really have no bearing on your day-to-day operations or in terms of your general funds operations are concerned. Okay. Nevertheless, those are the first statements that the GASB requires local governments to present in their annual financial statements. And the focus of these MD&As, therefore, initially in the first several sections, there are focus being placed on these district-wide financial statements. Now, I pointed that out because if you look at these statement of net, these district-wide financial statements, which starts on page 19. Okay. When you look at the statement of net position, if you ought to go all the way to the bottom part of the statement, which is the equity section, what we call net position, you will see that there is a big deficit, right? Overall deficit of $22 million, unrestricted deficit of $66 million, okay? But this is actually very misleading, even though this is what GASB requires, because this statement of net position requires all local governments to present all of their long-term liabilities on this balance sheet here. These are information such as net pension liabilities from the two retirement system, as well as the biggest one, which is other post-employment benefit liability, or what we call OPEB. These are the health insurance liability or obligations, if you will, that the district has to former employees as well as current employees who might retire from the district some years later. And that would have that would earn the benefit of having continual health insurance coverage through the school district while they pay a percentage towards the premium. The GASB requires all local governments to have an actuarial study calculated every year, which comes up with a liability, total OPEB liability, total other post-employment benefits liability. If you look at the middle part of this financial statement, you see a $68.48 million liability. Okay, that's an actuarial calculation, and there are assumptions being made. Mortality tables are being used. Interest rates, discount rates are being used in calculating this liability and the associated deferred inflows and outflows. But you can look at this really as the primary driver of this bottom unrestricted deficit of $66.12 million. If you didn't have to put that number on, think about the U.S. Postal Service some years ago when Congress required them to pre-fund this OPEB obligation. And for many years, we heard the U.S. Postal Service was having financial difficulty because they're basically bankrupt. And this was a big part of it, that they were required by Congress to pre-fund this OPEB obligation. But not local government, certainly not in New York State. You're not required to pre-fund this, and yet you're required to present this on the financial statements. Okay. Also included here are compensated absences payable. Okay, $1.15 million in the long-term due and payable after 1 year, and then the estimated amount of $134,000. So about 1.2, almost $1.3 million of compensated absences payable, also presented on the statement of net position. So what that is the cumulative for all of your current employees, their pay time off, earned but unused pay time off, okay, that they could be entitled to a payment upon their retirement in accordance with their respective contracts. Okay, so again, there's some probability that goes into the calculation. Someone who's been here less than 5 years, the probability might be less than 50% that they'll stick around until retirement. And so, so the calculation of the liability, is basically staggered based on those probability percentages. But this is as though the district, if the district is to close up shop on July 1st, 2024, what the district would have owed contractually to all the existing employees, right? So from an accounting standpoint, it's a liability. However, from as far as your general fund is concerned, it's not a true liability. In fact, on your general fund, there is a small liability for compensated absences payment that's due to people who actually have retired as of June 30, 2024. But again, the statement in that position, I wanted to point out these numbers to you just because it also affects the following page 20. Okay, called a statement of activities. The statement of activities, because it's related to the statement of net position, so any changes in the balances on that statement of net position would have flown through the statement of activities. Okay, so the changes in the other post-employment benefit total liability calculation by the actuary, also the net pension liabilities, I didn't even mention that earlier, but those numbers came from the TRS and the ERS. And it has to do with how well the two retirement systems are funded, or whether they have their total pension assets versus including their investments versus their calculated liability, whether they have more assets than they do liability. In the case as of your June 30, 2024 year end, the TRS was more than 99% funded, and the ERS was more than 93% funded, but they're not 100% funded. Therefore, it presented a net pension liability situation for both systems. And you, as a participating employer, gets to then pick up your proportionate share of their liabilities. And that number this year amounted to $5.4 million on page 19. Okay, and again, those numbers change every year. It depends on the TRS and the ERS's actuaries and their auditors. And your district, like all local governments in New York State, simply take the reports, download the reports from the two retirement system, and then do the calculation. Okay, and the changes in all those liabilities that I just talked about, as I mentioned, they flow through the statement of activities. All those statements I just made now is to tell you to not pay that much attention on statement of activities, because while it does contain your other general fund and your special aid fund, grant expenditures and income and revenues, there are other elements that went into especially expenditures into the statement of activities, that it becomes very hard to really for people to try to correlate one to the other. There is actually a reconciliation.
Alan, can I just ask a quick question?
Yeah, sure.
So what you're just speaking about, that occurs in all school districts?
Yes, all local governments, correct. Okay. So there's actually on page 24 is a reconciliation that's required by the GASB to help readers get from the fund financial statements to the statement of activities. Okay. As you can see, there are a lot of parts that that get pulled in or pulled out. So 987,196 at the top. That is the total government for all of the governmental funds, including the general fund, the total net increase in fund balance. In other words, the net surplus for the fiscal year. So the reconciliation start with that number and then brings you down to the $1.8 million that's then presented on page 20.
So just for clarification,
Mm-hmm.
so you were saying that at the end of the school year, after you reviewed everything, that our net change in fund balance was 987,000
For all of your governmental funds combined,
combined? Okay.
yes. And that is actually on page 23. If you look at page 23, that is I'll call it the income statement of all of your governmental funds. And general fund being the first column, the most important one, of course. Okay. General fund for the year ended June 30, 2024, ended up with a net increase in fund balance or net surplus of almost $196,000. Okay. That does include transfer of almost $260,000 from the capital projects fund, okay, of unexpended balances of 2 completed projects, and that was in accordance with our audit recommendations. I'm going back a couple of years. Okay, so essentially, your district's general fund was close to break even for the 23-24 fiscal year.
I have a question.
Sure.
About the scholarship.
Yes.
I'm sorry, at the bottom of scholarships, it says $108,357. What does that mean? That was unused? What does that mean?
So the scholarship funds, that's your ending fund balance. Okay, your fund balance is your equity. Okay, so the scholarship fund is a collection of multiple scholarships, right? So the donors make donations, and then in accordance with stipulations of the various scholarship, awards are made. Okay, scholarship awards are made, and then at the end of the year, collectively, all of the scholarship has remaining balances, cash balances, if you
Well,
will.
I guess what I'm asking is if there's 108,000 plus, does that mean not all the scholarships were dispersed?
Yes. And that's not unusual.
Just go ahead when you can have a question.
That's my question.
So just for clarification, so if you're saying there's $108,000 that's left, are you also saying that because scholarships typically have money in their accounts. So are you saying that this is all the money that's left over or that money was not just to clear, I'm just trying to get clarification.
So if you go to page 21, okay, the scholarship, this is the balance sheet. So there's $109,000 left in the bank for all of the scholarships.
So that means they weren't dispersed. That's what's left over.
Correct, yes.
Okay.
But can I just,
So for the year, so 23, 24, if you look at page 23 again, $9,000 in total scholarship money was awarded.
can I just ask a question? How do you, so how, not to belabor the point, but how do you disperse all the scholarship money? Because there's certain scholarships where there's money that's in the account that's there for, they're
Right.
only going to give maybe $200 a
Oh,
year.
and I'm not,
that's my question.
I was only simply, answering the question and yes, the theory is, yes, not all scholarship monies are dispersed, nor are they, depending on the stipulation of each of the scholarship,
Right.
whatever the donor's stipulations are, okay? Some donors may require that you can only disperse earnings from the corpus or the principal of the scholarship. And I'm not saying that that's across the board the same, okay? Also depending on the number of scholarship accounts that or awards that the district currently is responsible for administering, okay? There are also some scholarship awards may have an annual limit as far as the dollar amount of each award that can be given. How many recipients can there be? What are the eligibility requirements?
Okay.
So it's certainly not unusual to have a balance in the scholarship fund.
I have one more question. Sorry.
No problem.
The food service, the school's food service.
Yes,
So there was a surplus of $334,323 that went into the unassigned fund balance to build up the unassigned fund balance. Where did that money go?
so it stays in the school food service fund.
Okay.
So school food service fund, as you can, when you look at the page 23, you see that the bulk of the revenue came from federal reimbursements. Okay, so the federal government reimburses school districts based on the number of meals served to students. Okay, the state also reimburses a much smaller portion. Because of the federal funds that go into these reimbursements, the federal government considers that fund balance theirs. Okay, it's federal money. It can only be used towards the cafeteria program. And that's why if you, when we go over the management letter later on, you'll see that on one of the two prior comments that have been resolved, okay, I made reference to the federal regulations. Federal regulations said that the school food service fund should have no more than 3 months of operating expenses in its net cash balance, in other words, equity. But they have since changed that for, at least for New York State, as far as I know, from 3 months to 6 months now. Okay, so the fund balance has to stay in the school food service fund for towards the cafeteria operation.
Thank you.
You're welcome. Okay.
Can I ask before we move on?
Of course,
Okay, the extra classroom activities,
yes. These are student clubs balances.
Why do we have such a balance? Like, should we be seeing revenues and expenditures matching and becoming a net zero?
So
We're carrying over
the
this
smaller financial statement that you also have, it says tentative draft ECAF financial statement. Okay, and you have this too. It's a thinner financial statement.
Yeah.
Okay,
okay, yes.
so if you go to page 3, starting with page 3, you see all the various student clubs, pages 3 and 4. Okay, and the cash receipts and transfers and disbursement and transfers activities and then the ending cash balance. So school boards have oversight responsibility for these student clubs, even though these are not school district money, right? These are student monies. And so it's their money for them to, to spend it basically however they see fit. Okay, and again, you're not, they're not required to zero them out. Okay, although if you look at the graduating classes, those typically for most districts, once the class graduates, if they have any leftover balances, then either by board policy, they might be transferred to the remaining balance might be transferred to student council, or the graduating class themselves might vote to gift the money to, well, for whatever purpose they want to do. Okay, but typically, again, it's not unusual. Most school, almost all school districts have extra classroom activities fund that they have to account for, but these are what made up the balances. The total revenues that you see on your district financial statements and the total expenditures, okay, they do not match this ECAP financial statement, because you look at the column heading, it's receipts and transfers, okay, as well as disbursements and transfers. So if there are inter-club transfers that are presented, they're not considered, of course, revenues or expenditures, and so they would be excluded from the district financial statements. However, you can see that the ending balance on page 23 is the same as the ending cash balance of the extra classroom financial statement.
Okay, thank you.
You're welcome.
We're kind of,
I just wanted
Talking
to add
over here.
also that a lot of times, the balance is carried over for startup costs, like for just, the example of the drama club, for them to get started in the beginning of the year. The club from the year prior, they do leave money in the account for the following year for startup and whatnot.
Right.
okay,
Okay.
so the capital projects, we just leave that money there?
No, you don't. You spend it. The nature of capital projects is such that they're often not done within 1 year, right? You have to wait for approval from the state education department in order to start a project. Oftentimes projects are only done over the summer, and a specific funding. So in this case, if I remember correctly, it's the middle school. It's a combination of funding from your capital reserve transfer from the 22-23 fiscal year, $2.5 million, as well as, thank you, as well as budgeted transfer from the general fund into the capital projects fund, including the current year 23-24 fiscal year. If you look at page 23, at the bottom, other financing sources and uses, we don't call it revenue because it's coming from within your school district, albeit from a different fund, in other words, the general fund. So operating transfers in of $1,581,853. That was the budgeted amount in your 23-24 budget towards capital projects. Okay, now if you would, the proceeds of that, the $740,000, that really is an accounting entry to account for new leases that have been that commenced in the 23-24 fiscal year. The majority of it had to do with Chromebooks and IT servers. That's the calculated value, present value, if you will, of all of the lease payments, primarily for those Chromebooks. I think it's like 1,000 of them, and IT servers, as well as a smaller one, I believe it's for mailing machine. If you go to page 63, okay, so this is a required schedule that the SED requires school districts to present. Okay, so this is a schedule of project expenditures and financing resources for the capital projects fund. Basically, if you look at the first two columns, if the lines did not have a budget for June 30th, 2023, but there's a number in the budget 2024 column, that means those are new funding source. Okay, so the 1,356,853 plus the $225,000 of security cameras upgrade, those two amounts made up the 1,581,000 that we saw earlier. The $740,000, 326, as I said earlier, that's just the accounting entry to get the equipment leases onto your books, so to speak. If you go all the way to the far right, to the right-hand side of the right column, fund balance June 2024, you'll see that the equipment leases line has no fund balance left. It's simply an accounting entry. But the rest of them, you'll see that there are some leftover balances. Okay, one of them, the second row, negative $570,000. I put an asterisk there. That has been one of the audit recommendations from years past, which predates this current administration as well. So this is where the district in the future budgets will have to come up with some fundings to cover the over expenditure. Okay, the district-wide bond project, 1516 district-wide bond project. Overall bond proposition was $69.98 million. Expenditures were actually $70.5 million. The budget number changed a little bit this year by about $15,000 or so. Actually, excuse me, $19,000. And that's because in one of the previous year's budget, as I analyzed the capital projects budget, the funding budget, I noticed that in the 22-23 school year budget, actually, when Mr. Dragon was drafting the budget, he had put in the transfer to capital projects line that up to a certain dollar amount, $18,000, $19,000, was to be used towards any over expenditure for this bond project. And that's why this year I made that correction and I corrected the budget.
I have a question on this. So this is for the 1516 bond.
Mhm.
The district overspent by just over almost $571,000.
Right.
When, do we know what year that was overspent? Is that part of the 3.6 million that was overspent? That 570, like, I'm trying to see where that, because I'm trying to see, was it paid down at all, that over expenditure, or no, we just keep carrying over that debt and we're not paying it down?
Well, it's we can certainly look back. I don't have that answer right now. I apologize, but we can
Okay.
certainly look back. The district does have a very good records on capital projects. So because of the nature of capital projects, it's as you know, it's authorized by voters. Okay, so the district cannot simply move money around from all the other remaining projects that have outstanding balances, and that's why the recommendations that I've made in the past was you need to either budget for it in a future general fund budget, because general fund budget will go before district voters for approval, and if it's fully disclosed in the budget document that, hey, part of this, we need $571,000 for the 2015-16 bond project over expenditure. If the district voters approve the general fund spending budget for that year, then that will.
So my
go into-
question is, this hasn't been paid down since last year when you looked at it and you
Correct.
identified it. There was nowhere has this been paid down.
That's correct, because of timing, right? Because we identified it, when did I report to the board? In late October. Okay, of course, by then the 23-24 budget was already set, right? It was voted on back in May. So the Ms. Buatsi and even Dr. Talbert, we did discuss the capital projects, I think earlier on, as you were putting your budget together for 24-25. But obviously the district has other challenges when it comes to the budget for 24-25, and therefore, it was agreed, your administration agreed that it's something that they need to address, but not during the 24-25 fiscal year.
And so we are planning to address it in the 25-26 school year.
Okay, thank you.
You're welcome. So to answer your question, they don't just sit there. You know, you will, for example, the capital reserve transfer $2,500,000. Okay, it was transferred towards the end of June 30, 2023. In 23-24 fiscal year, you started to incur expenditures of $220,000. So it'll continue to be spent down. Okay, over the
Yeah.
next year or two.
Thank you for pointing out this table. It's very insightful, interesting to see that this would be our capital money available for the middle school project,
You're welcome.
which is, yeah.
Okay. Right. So it's the 2,000,005 plus the 1,356,000.
So Alan, I'm just going to interrupt for one quick second.
Sure.
Not a question to you whatsoever. Anyone who's here for the Citizens Budget Advisory Meeting, it's remind is going to be over in Park North for 7 o'clock start.
Okay. And then the other items that I want to point out to you while we're on this page is the bottom half of the page. You'll see two numbers on the right-hand side, on the right-hand column, $502, $259,288 of fund balance with two asterisks. So those were the two projects where the expended, the balances were transferred back to the general fund during the 23-24 fiscal year.
Which page were you on?
63, the bottom, yeah. Okay.
So they were transferred back to,
Right, correct. Yeah. In other words, you know, we also don't want to see completed projects with fund balances just sitting in the capital projects fund, right? If it can be brought back to the general fund, then that's what the district should do. If it has to be brought back towards servicing, towards debt service, then that's what needs to happen also. But I think, you know, at least for now, once you've addressed the issue of the $571,000 of our expenditures, then the district can, you know, over the next year or two or three, decide on, you know, the remaining capital projects and see whether or not those were completed and the balances can be brought back into the general fund.
So
Alan,
are you
I'm
saying
sorry.
that this $260,000 was brought back into the general fund, but we still have a $570,000 deficit in this same column? So we decided to move it back into the general funds?
No, because these are different projects, right? So you cannot use one project's funds to cover another,
Okay.
at least not
But
that
you're
easily.
still- Okay, but you still present it as a net fund balance.
Oh, yeah, exactly. It's a net of 3,458,000. It's cumulative, right? It's everything combined to the very bottom. So the capital projects fund at the end of June 30th has a cumulative overall fund balance of $3,458,000. And you will see that on page
Be-
21.
before you go to the
Yes.
next page on page 63,
Mhm.
just for, I'm at the bottom on the far left column. on
Okay.
Page 63, under the column that says fund balance through June 30th, 2024. At the bottom, it says less the state aid not yet received, the 1.3.
Mhm.
So that's money that will be coming in, but we just don't know when it's coming in.
That is correct. That has to do with the Smart Schools Bond Act funding. Okay, if you look at it's kind of in the middle of the page. It doesn't have a fiscal year in front of it, that line, Smart Schools Bond Act. Your total allotment from the state was $2,082,000. Okay, your district has spent a little over $2 million cumulatively. Okay, and you have applied for and received reimbursements of roughly about $700,000. That still leaves $1.3 million of state aid not yet received. I know that actually Dr. Talbert's office was looking into those outstanding Smart School Bonds Act claims as well.
Okay.
Yeah.
And then the last question that I think I have, because I think I just lost my question, so go ahead.
It's okay. So while we're on that subject, if we go to page 21 now, we're still talking about that $1.3 million. Just want to point something out to you. Okay. This is the balance sheet of the governmental funds. If you look at capital projects fund assets, see the 1,304,818 due from state and federal. Okay. And a little further down, deferred inflows of resources, unavailable revenues, it's the corresponding credit, if you will. Okay. In other words, we recognize that you have the right to the receivable of 1,000,003, but because of the uncertainty of when the district will actually receive that reimbursement, it's not recognized as revenue. Okay. Because it's not recognized, it has not been recognized as revenue yet. That's why on page 63, you saw that number being subtracted in order to arrive at the $3.4 million ending fund balance. So as soon as when the money starts coming in, it will then go into your capital fund balance as revenue earned.
Just, I know my question was, stay on page 63, just for clarification.
Yes.
So for the district-wide bond project back from, to finish up roughly about 2017 or so, that amount that we still owe, is there any penalty connected to not paying it or not really? Are we able to pay it in increments? Can we pay?
Not really.
That was the question.
There isn't really any penalty. Other than that, basically what you have done essentially is you've taken money meant for other projects to pay for the bond project to the tune of $570,000. But it's fine because if you look at all the other, older projects that have been, that have no expenditures for a number of years, like $112,000 for the 15-16 district-wide capital improvements that were funded from local sources, and then the next several lines. So the capital projects fund itself overall has money. So there is not a penalty, but it's something that you should address.
So in the end, Alan, it means that when we plan to cover the $570,000 in the 25-26 budget, the net will not be $570,000 because they are projects with balances in them.
Right.
Thank you.
Thank you.
You're welcome.
Just one more on this.
Sure.
If there's projects that are closed out with no further expenditures, can we move that money back into the general fund? Didn't
You
you just say
can.
we should be doing that?
By board resolution, yes, you can. Okay, right, exactly, especially since, as long as they're not capital reserve money, right, then yes, it's something that the school board can do.
So, okay, 2015, 2016 capital improvements, you're saying that's capital reserve money?
No, it's not,
So
Okay, if it's-
there's money right there that we can move.
yes,
Thank you.
you're welcome.
There's others. I mean, I only read one.
Yeah, and this is something that, I have discussed with the administration. Okay, so, again, the plan, my advice was do not move the monies from the top half of this page just yet because of this $570,000 deficit. Because another way potentially to address that is through a specific proposition, right? If you have a proposition number 2, number 3, presented to the voters and say, hey, voters, may we take these numbers of completed projects from prior years that are sitting in the capital projects fund and use the balances to cover this $570,000. That's an option too, right?
Okay.
That way, then it doesn't have to go into your general fund operating budget,
Okay.
right? So
And that would save on interest payments that we're currently making, right?
no, it won't. You mean you're talking about bond interest payment?
Yeah.
No, it won't. The bond is the bond. The bond is, it's limited to the $60 million that had been borrowed. So it does not affect the bond interest.
Right.
Right.
I'm
What
just
is-
saying,
what is-
there's a significant amount of money that we can pay off this debt and then transfer to the general fund if we need to. It's been sitting here. And some of this goes back from 15, 16, and then through the years.
Right,
Yes.
So it's kind of sitting here. We can use this money.
correct,
Yes.
Okay.
yes.
with
So
both
either
of
you
them.
use this money, via proposition to cover that $570,000 over expenditure, or you do it with a budget transfer, including transfer to capital projects fund, and then by board resolution, or even use through the budgeting process, bring these completed project balances back as transfer in as revenue.
Yes.
Okay, so it works out the same way.
Excellent.
Okay.
Thank you.
You're welcome. And I just want to point out to, since we're talking about bond payments, there's actually on page 43 of the financial statements. Okay. There's a schedule here to showing the maturity of or your existing bond payments, as well as the interest rates on the bonds.
43.
Page 43, correct.
All right.
So we're paying till 2043.
What is this, 2022 bond
It's a combination.
combination?
That's part of that $69 million project. So for a long time, your district was using short-term borrowing called bond anticipation notes, BANs, to get the cash flows, okay? Because interest rates much cheaper with a short-term ban, we call it bond anticipation note. But at some point, within 5 years, you must convert these short-term notes into long-term borrowing, in other words, bonds. Okay, so that's what we're seeing.
This is what's outstanding on the project that was completed in 2017. That's what that is.
Right, I mean, on page 23, the fiscal year that was
You mean
put
page
there is
63 or 20?
page 63. Right, we're talking about the one that was overspent by $570,000. We call it 2015-16. That's the year that the bond proposition was approved. Okay, so that doesn't mean that it was completed in 15-16.
No, I understand construction. That's fine.
I
But
didn't
we
mean that
still-
you,
Yeah,
not
but we
to,
still have that much outstanding.
yes,
Yes.
that's correct.
Yes.
That's correct. That's the project, right?
Okay,
Yeah.
It was a good project, I guess.
I didn't mean to suggest that you didn't understand.
Thank you.
You're welcome. It's just that, all those fiscal years numbers. And, okay. All right, now, and we jump into the general fund, okay, the main course. All right, so the general fund, page 23, total revenues for the fiscal year, 112,168,000, plus, as I mentioned, the operating transfers in of almost $260,000 back from the capital projects fund. Compared to the 22-23 fiscal year, your total revenues a year ago was $103.4 million. So it's an increase of $9 million compared to the previous fiscal year. And the increases came from several areas, and which is exactly what we expected. Okay, aside from your property tax revenue increase based on the budget, which came to about $2 million. $7 million of the $9 million were from non-tax revenues, and it's predominantly from state aid, which increased $6.28 million. That's almost 16.5% from the 22-23 fiscal year. 22-23 fiscal year, you received $38 million in state aid. This year, 23-24, $44.3 million.
So I think I'm on the wrong page. What page you on?
23?
Page 23, I'm sorry, I'm reading the comparative information that you don't see on the financial statements.
Oh, tricky. Okay.
No, well, again, remember I said to you, I told you that the format of financial statements are prescribed by the GASB and the SED, right? So these are not comparative financial statements. And so, but in order to help you understand your finances better, I do have my cheat sheet, so I apologize. Okay, you're welcome. Kind of just to, put things in better perspective for you. Other areas that saw increases, interest earnings, okay? You received combined between the premium from the tax anticipation of borrowing and your interest earnings, combined, it's about $791,000. That compared to a little over $500,000 a year ago in 22-23. So it's an increase of almost $283,000 from the previous year. And then on top of that, with the $259,000 coming back from the capital projects fund, which we talked about earlier, those are what made up the $7 million of non-tax revenue increase. Any questions on revenue side? Okay. By the way, towards the back of the financial statements on page 57, there's also a budget to actual schedule presented for the general fund revenue, and this is a schedule required by generally accepted accounting principles by GAAP.
Wait, I do have a question about the revenues.
Sure.
So we've been told that the interest on TANs kind of evens out with our revenue side. Is that true?
Evens out on your revenue side.
Oh, what you're saying is that we got investment income from when we borrowed the money, we invested, and because last year we paid about 485,000 more in TAN interest. That's what you're talking about. Yes, it balances out a little bit because we paid more for the TAN, borrowing the TANs, and then we earn more from investing because interest rates went up.
So TAN premium, tax anticipation notes premium, this is how school districts would evaluate the bids on the TAN borrowings, right? They take into account not only the interest rate, but also the premium to find out which bidder is giving the best deal to the district. So TAN premium really has the effect of reducing your interest cost, but accounting wise, the state requires school districts to present the premium amounts as a revenue, okay, on the income statement. If you go to page 42 of the financial statements in the notes section, there's a disclosure about the TAN borrowing, the amount of gross interest expense on the TAN borrowing, as well as the impact or the effect of the TAN premium being recognized as a revenue on those borrowings. Okay. So interest expense this year was $786,000, and the TAN premium was $164,000. So the net result is that your interest for TAN borrowing was only about only $621,000. And so just like you said earlier, it's being offset by higher interest earnings.
But not
canceled.
Canceled.
No, no,
No.
there is no free lunch. There's no free money. No, it's not. That's not canceled. 4.75% interest rate, that's very high. For many years, we're used to seeing 1%, 1.5% on these TAN borrowings. But on the flip side is your interest earnings from your, cash in bank, they also went up. And again, this is the expectation that we had expected to see, and we were seeing the same type of revenue increases across the board, at least for the 14 or so school districts that I audit. Okay, back to where was I? Page 23. Okay. So now on the expenditure side, total expenditures $110.3 million, and then along with operating transfers out of $1,878,000. That's we saw the $1,581,000 transfer to capital projects fund. The other $296,000 went to the special aid fund. Those are the required district contribution by the districts towards the state programs, primarily two programs. It's the summer school for students with disabilities, what used to be called a summer handicap program, as well as the state-supported schools for students with disabilities. We call it the 4201, Section 4201 school. So there are required contributions that your district has to make. It's general fund money, but the 100% of the expenditures have to be accounted for in the special aid fund, and therefore the district's share of the funding is being recorded in the form of operating transfers out. So total expenditures, excluding the transfers, especially since in 2022-23, the transfers to the capital projects fund, including the capital reserve, was $4.2 million. So excluding that transfers to capital fund, the non-capital fund related expenditures was about $110.6 million versus $107.3 million from a year ago. So it's an increase of $3.3 million, roughly about 3%. The areas that saw primarily the most increases, and by the way, in the management's discussions and analysis section of the financial statements, I have put in some explanations for some of the expenditure increases. Okay, you can see that. Starting on page 11, going into page 14. So those are the discussions. 15 discussions on your governmental fund. And as far as the expenditures, your salaries, overall wages and salaries were quite flat. It only went up by about $195,000 compared to the previous year, 22-23 fiscal year. So that's less than 0.5% increase in terms of wages and salaries. But employee benefits did go up by about $730,000. It's primarily in the health insurance, okay, that went up by 9.8%, $925,000 compared to the 22-23 fiscal year. The ERS contribution also went up by 11%, about $91,000. That's based on rates, okay, the increase in the rates. And on the contrary, the TRS's contribution rates did go down. As a result, the TRS contribution expenditure actually went down by about $158,000. Okay, so combined, the net result is actually unemployment insurance. Unemployment benefits went up by $70,000, but workers' comp did come down by $164,000. So combine all of those different employee benefits area, that the variances it net to a $730,000 increase in the employee benefits. But the biggest areas that had the one expenditure area that has the sort of biggest increase was in the special education area, and specifically the payments related to parentally placed private schools. Okay, the expenditure went from $1.8 million from the 22-23 fiscal year to about more than $3.2 million. Okay, charter school payments actually also went up. I did not put down charter schools in the MD&A section, management's discussion and analysis, so I actually might put that bullet in. Charter school payments went from $924,000 in the 22-23 fiscal year to about $1.14 million, a little over $1.1 million. That's an increase of more than $210,000 or 23%. The debt service payments also went up.
And you're still on page 23, right?
I am still on page 23, yes. Again, because, this is single year, you're seeing a number. And actually, if you look at page 58, that's the budget and actual schedule for the expenditures. And it gives a little bit more detail than the expenditure section on page 23.
And I think this, it's also what you're talking about, some of the explanations on page, between pages 11 and 15.
Right,
Okay.
exactly.
And I also wanted to mention regarding the special education, it has to also do with students who were in residential facilities. Because there was an uptick in the number of students in residential facilities. And the district pays, the county pays 43%, but the district pays 56% for the maintenance of students in residential facilities. And on average, each student costs about $19,000 a month. So any uptick in that line causes the line to go up. And it's all because of CSE placements.
I just have a quick question. Something jumped out at me
Yes.
on this expenditure sheet.
Which page are you at?
Page 58. Board of Education, $147,000. What could that possibly be?
So there are contractual expenditures as well as salaries, so the district clerk's salaries, that's part of that line.
That's not all of us. It's basically the, when we went from part-time to full-time as a district clerk in there.
Yeah, but that's still
Yeah,
a lot more money. I mean, I guess we could talk about that at the next meeting. I would like to know what that is.
Yeah, it's a,
Yeah.
you see, the Board of Education line includes the district clerk, like he said. So when you look at it, it
other
looks
things
a
too.
little bit confusing. It's not just the Board of Education, but the next session underneath it, 1040 and 1060, right?
Yeah, because if you look at, the reports that we get,
Yeah.
if you look at all the lines, and you'll see.
Right. The appropriation
Yeah,
status report,
yeah.
right?
yeah,
Okay.
what-
Yeah, I think if, correct me if I'm wrong, I believe voting expenses, that's also part of
Correct,
the Board of Education
Correct.
line.
Okay.
Okay.
Okay, got
Yeah.
it.
As I was about to say, the overall debt service expenditures also went up because, you know, those, the bonds, the debt service payments started kicking in full in the 23-24 fiscal year. So combined, the long-term debt service principal and interest payment went up by a combined almost $960,000 from a year ago. Both these costs that went up by about 5% or $663,000. Insurance actually also went up by $180,000.
and this is liability, commercial property, and all those insurances went up.
So those are the expenditures. So going back to page 23. So the general fund ended the year with a net increase of $196,000. The total fund balance went from $8,275,000 to $8,471,000. Now, on page 21, on the balance sheet at the bottom, you will see the number of different restricted reserves, as well as the unassigned fund balance that made up the $8,471,000. And in the MD&A section, which I pointed out earlier on page 11, you see the 2-year comparative table for the fund balances. Okay. So you will see that for the most part, most of the restricted reserves, the increases were 2.14%. That's interest earnings allocated to the reserves. The employee retirement system is a net decrease of $534,000. That's because your district used $600,000 per the 23-24 adopted budget towards expenditures. Okay. So the end result is that your unassigned fund balance, the rainy day funds, that's the number that that you're limited to no more than 4% of next year's budget. Last year it was down to $686,000. And now you're able to increase it somewhat to $1,337,000. So it's a positive step for sure.
So Alan was gonna just kind of ask, is there some additional key points you want to bring to us or something from like the management letter, just because there's others business that we have to
Oh,
do in open
okay.
session?
I'm sorry.
I'm
I just
sorry,
want to
listen.
make, I just want to make a statement that, typically this kind of in-depth analysis and discussions would have taken place. I guess today was going to be 5 o'clock, but I think the board, in the interest of transparency, wanted to have this discussion out in the open, and I certainly appreciate that. But you can see why, sometimes the public meeting might not be the best forum for this kind of in-depth discussion and questions, because it tend to take a long time. So I apologize for that. All right. So any questions about the finances of the district's general fund? Okay.
Anyone have any questions?
So in summary, before I move on to management letter comments, is that the district did much better this year compared to the 22-23 fiscal year. Your overall expenditures, while you did underspend it by about $500,000, that's about 0.5% of your budget. So you spent 99.5% of your budget. Most districts that we audit, the good ones, the ones that don't have too much fund balance, but their spendings have been consistent. Typically, they spend in the realm of anywhere between 97.5% to 98.5%. Once you hit 99%, it's starting to feel a little too close for comfort, right? Because all it takes might be a few more unplanned children who needed special ed services, then your $500,000 of underspent budget could be gone.
Can I
Yep.
ask a question about that?
Yes.
The 99% that you just mentioned, was that pretty ubiquitous through all like accounts? Or were some off, but others really close?
It's all of the accounts. If you look at page 58, so first of all, budgeting is not an exact science, and even the state would admit to that. So you have an adopted budget, and then district administration and school board can make budget transfers throughout the year. Okay, so if you look at page 58, okay, the final budget column, the numbers are based on your district's most recent appropriation status report, as far as the final budget transfers have been made. And you can see the areas, okay, where, under instruction, the big ones, the $2 million programs for students for disabilities, okay? And then you have other areas, principal and interest. But the principal and interest, the reason for that, okay, the $741,000, it actually has to do with the lease liabilities. You might remember when we looked at the capital project schedule, and I told you about an accounting entry that we needed to make to put the new leases onto your books. That's some GASB accounting requirement, goes statement number 87, that changes how local governments have to account for these payments for leases, where you paid those BOCES for these Chromebooks and IT server lease payments, and those are charged to the various budget codes, to the BOCES code 0.490 object code. It could be in 2110, the general instructions, could be in the 2600s in the instructional media. But the GASB requires local governments to reclassify those payments as principal and interest, okay? Because they're saying, well, you pay them, but these are lease payment, therefore they are liability, that they are considered debt service. So during the course of the audit, when the business office finished calculating the present value and we came up with the amortization schedule for the principal and interest, those payments that were charged to the various different program codes were then reclassified out of those codes and put them in as debt service principal and interest. And that's what caused the $741,000 $1,000 negative variance, okay?
I have a question.
Yes.
Caroline, are you done?
Yeah.
Oh, okay. So we got more state aid, unanticipated increase in state aid this year, right? I think it went up.
No, they were,
For last year, for
they
24.
were mostly budgeted on page 57. Your budget for state aid was it's $43.99 million. So you received 44, so your actual state aid was about $323,000 more.
Okay. But then so you said how much was it? 370,
323.
323.
Right.
And then we had how much left over then? We had like 570,000, was that right?
That's the spending side. So on the spending side of the budget, you spend all but $509,000 of your final budget.
Okay, so what I'm saying is without the increase in aid, we'd be really tight again because we didn't necessarily curb our
Oh,
spending,
absolutely.
right?
If you look at,
So we haven't really moved towards curbing our spending.
We did curb our spending.
I'm saying it's close though. It's not,
it's close, right? But you
Yeah.
didn't overspend your budget.
right, we
That's-
didn't overspend it, but I'm saying we did have an increase. So like it's close. Like we have to do a little bit of a better job on the expenditure side.
You could say that, but the areas that I pointed out to you were largely beyond your control.
Okay.
Employee benefits, beyond your control.
Mhm.
The special education costs that we talked about,
Mhm.
pretty
And the
much beyond, it's a
insurance, okay.
$1.4 million increase. Insurance went up, right?
Right.
BOCES charges, so, BOCES, I understand that their administrative costs have gone up, okay? So it's, and I think elsewhere in my report, I also pointed out, in the management letter, actually, as we tested the overtime.
Yeah, that was
cost.
gonna be a question because I noticed with the overtime, like we were supposed to put controls in place and one of them was buildings and grounds doesn't have any sign off on overtime.
So, right, so if I would jump into the management
Yeah.
letter, if there's no more questions about the financial statement. So just wanted to, in conclusion, the district did better this year. Your unassigned fund balance did go up to a little more than 1%, but it's still a long way from your 4%, obviously. And with the 23-24 budget, the one thing that you didn't get to use in your budget, it was $1.4 million of appropriated fund balance. But because of the lack of fund balance in last year, you really didn't have that available for use. But fortunately, your actual revenues came in at $1.6 million higher than budget. So it was able to, the additional revenue was able to provide the funding needed in order to pay for all of your expenses.
Right.
Okay.
I'm sorry, before we go to the management letter, that $1.4 million in the unappropriated fund balance, we just decided not to use it, or is that something?
It's not even up to you because I decided for you based on
decided for
Gatsby's
us,
statement 54. It's an accounting standard that
Okay.
says that you cannot use assigned fund balance is a concept of an estimate, right? You cannot allow an unassigned fund balance to put your general fund balance into unassigned fund balance into a deficit situation. Okay,
Okay.
so
it's a
that is an
buffer, it's
accounting
a
standard.
Contingency.
Excuse me?
What about the instructional media? What is instructional media? We saved almost $1 million.
It's computer costs primarily, computer hardware and software.
Okay, I guess I was thinking that we would have saw a savings in our teaching salaries. So that seems pretty stagnant. We laid off a lot of employees. Oh, but we had to pay them through the end of the year.
And,
So then
right,
instead,
and
we cut back on the instructional media.
I thought the layoffs were happening for 24-25 fiscal year.
they were.
Yeah. Yeah, well,
Right,
you
so
just
we
said that
wouldn't
we
see it
paid.
in this.
Correct.
Right, but then somehow we managed to save almost $1 million in instructional media, which is a little concerning to
No,
me.
instructional media, it's one line, but it has salaries, equipment purchases, contractual expenditures, hardware and software. Yeah, that, I'm showing the contractual expenditures went down by about $350,000 for the instructional media. Okay, so that, I'm sorry, I didn't have my note in front of me, but that's likely due to lower hardware and software purchases.
I have to look through that too.
Okay.
You know, combination.
Yeah, it's the 2630 function code.
2630 function
Okay.
code.
Okay, thank you.
Yes, and the technology.
I do want to,
Position.
I would love to hear
Yeah.
follow up on how
Okay,
we
good.
managed to save
Yeah.
that much money. Thank you.
Okay. Again, keeping in mind that the district did have new Chromebooks, as I said earlier, 1,000 of them through the BOCES leases, but they're not classified as instructional media because they're considered, lease, principal, and interest. Okay. And moving on to the management letter. As I mentioned earlier, there are a couple of recommendations from findings from last year that has been that are considered corrected. The school food service fund balance being one of them. Based on the new threshold, you're no longer you are now in compliance. Okay. Posting of annual external audit reports and corrective action plan. Last year, we noted that the district only had posted up through June 30, 2021's audit reports and not 2022. So it's been corrected already.
I have a
District-
question on that.
Mhm.
As far as these management letter and the audits, how quickly is the district required to get these up, published?
Within 30 days after they've been released by the auditors. Okay, so as of right now, these are drafts, so these are not public documents yet. Okay. Prior year comments not fully addressed as far as capital assets. Districts should really be completing a fiscal inventory periodically to make sure that the inventory records that you right now the districts they provide updates, okay, additions and disposals for the current fiscal year to the capital assets management company, who then generate a report and provide them to the.
It was budgeted in the 24-25 budget, so we're gonna do it.
Thank you.
Alan, when you say periodically, how, just give me a time frame.
The federal government, if you use federal grant money to buy equipment, then the federal government requires that you have a fiscal inventory of those equipment items every other year. Beyond that, if it's general fund money, at least once every 5 years.
Yeah.
You're welcome. Okay, page 3, Special Aid Fund Summer Placement Program. This is the summer program for students with disabilities that I mentioned earlier. In a very, very rough explanation, the state, New York State would pay for, well, will reimburse a school district up to 80% of approved costs. Okay, so over the years and in most schools, almost all school districts that we audited, the actual cost to the district is almost always higher than their approved cost. In other words, the reimbursement from the state in relation to your actual cost is almost never 80%. It's always going to be less than that. But from a bookkeeping standpoint, most school districts will typically record, okay, if I spend $500,000 for the summer program for students with handicapping conditions, we're going to record 80% or $400,000 as state aid receivable. And let's see what happens over the next 3 or 4 years, how much money we get back. So over time, what happens is districts will have these old outstanding receivables and that are not being collected. And then all of a sudden auditors ask, well, what are you going to do with them? It's building up. Then it's a write-off that the general fund has to then pick up. So our recommendation.
Is it also not because when it comes to related services for summer programs, the state doesn't reimburse you the exact 80%, sometimes as low as 50%.
Right.
So it depends on the service that the kids are getting.
Right.
So it's something that we have to review on an ongoing basis.
Exactly. That's exactly right. And again, bookkeeping wise, for the accountant type would simply take total gross expenditures for the program, multiply 80% to record the receivable. Okay. And because it does take time for the state to reimburse school districts. There's a process, the stack process, where district has actually up to 3 years. There's a 3-year window for the district to provide adequate information so that they can be entitled for, so all the eligible children and eligible services can be reimbursed for. Okay, so typically, when it comes to the external audit, we also afford the school district the same 3-year window. So if we look at where we're doing the June 30, 2024 audit, and we'll look at the June 30, 2021 program and ask, okay, well, right now you have $137,000 still outstanding and receivable. How much are you really going to get from the state? Okay, so that's something that the district will have to continue to work on to try to. I gave some information here last year as we talked about the 2019-20 summer program. The receivable was $66,000 as of June 30, 2023. In the 23-24 fiscal year, you collected $34,000 of that 66. So potentially there might be a write-off of $32,000 in this year that would have to be absorbed by the general fund. Okay. So if this can be looked at more concurrently certainly over a 2-3 year period to try to really nail down the actual reimbursement that you're entitled to, then you don't have to deal with a lump sum write-off in a given year. Capital projects fund balances, I don't think we need to get into that anymore. It's what we talked about earlier. General fund unassigned fund balance, pointing out that it went from 0.6% last year to now it's up to 1.14%. So slowly moving in the right direction. We have 2 findings this year, new comments, internal controls over overtime. What we found was that while there's some unit, really the clerical unit, they do have pre-approval overtime, pre-approval form that are being used, although not very consistent in that sometimes while some of them were indeed pre-approval form and signed off by the appropriate administrators, some of them were done after the fact. And, one, at least, a couple of them, it was a specified time period, but without an estimated number of hours of overtime expected to be worked by the individual. So, for us, that's an ineffective control as far as the pre-approval. It's important to have pre-approval form. Ms. Canestro, you did correctly point out that some other areas that we looked at, there were no pre-approval forms being used. Although timesheets, after the fact timesheets were submitted to payroll for processing, and those after the fact timesheets were signed off by the appropriate department heads and district administrators. Again, you want to have effective internal control. Employee A needs to work 20 hours of overtime in these and the coming 2 weeks because of these reasons, and the department has signs off on it. Then when the actual timesheets come in, oh, how come employee A charged 30 hours of overtime? We only approved 20 hours. So that would be a much more effective internal control to have in place.
So does that goes through the department and then it goes through payroll too? So is it like 2 checkpoints?
So
Let's say like building and grounds, the supervisor should be having a overtime sheet signed off for pre-approval. And then it should be a second checkpoint at the payroll, at the business office, correct?
correct.
So it should have been flagged and
Right.
stopped
If
then.
if there were pre-approval forms being used for, let's say, the buildings and grounds area, then when it comes in for the first check is buildings and grounds, with director of facilities would say, hey, employee A, how come you work
That
more
could be
hours
the
than-"
first stop, the
Correct.
first gate.
Right. And then when it goes to the business office payroll, I mean, your payroll person is processing payroll, and your payroll person for the most part checks the timesheet. So that could be your second gatekeeper, or that your payroll person could then question buildings and grounds department. Hey, did you look into this? This person was authorized to work 20 hours. Time sheet came back as 30 hours.
I just wanted to take a moment to point out that, of course, pre-approval of overtime is a work in progress. And the district was without a director of facilities for about 6 months. The head custodians were signing off on the overtime, as well as those accompanying departments. And then, of course, it would go to the business office. Certainly, there was around a 45% decrease in the payout of overtime from the 22-23 school year to the 23-24 school year. So we are reanalyzing, and we have been discussing the internal controls that we had put in place and how to actually strengthen those across the board. So thank you for pointing that out and duly noted.
You're
Then-
welcome.
Then I do have a question also, because it says, I think it says, did I read that right? The business office, a clerical overtime, some of them were approved, they were signed off correctly, but it was after the fact, it was retroactively. So I would just ask the administration that Alan's telling you, you need these forms to be signed off for. This is a control. If the auditor is telling you this is a control, that's probably a good control to put in place. I know you're evaluating it, but we need it implemented.
So we're not refuting that by any means, and we have been continuing to discuss this among administration. And some of the dates on the forms were dated after, and approval was given before. So we have taken those conversations and steps to ensure that approval dates line up with approval given. So we are making those corrections
Yeah,
even now.
we were told that verbal approvals were given, pre-approvals were given, but again, it's much better to have it documented in writing.
And I think that was in last year's report too. You mentioned that, the same thing in last year's report, that it was verbal, but there was nothing, in writing, and it was a recommendation then. And a year later, we have the same recommendation.
It actually, it was not, I probably talked about it, but it was not in last year's management letter. But this year, as we, performed this testing of overtime, we did find that, and that's why I put it in the management letter.
Thank you.
Okay, and then the last finding has to
For
do
you,
with,
can I just interrupt for a minute?
yeah,
I
sure.
just want to talk about the overtime. My husband is your maintenance foreman, and he gets calls.
I'm sorry,
At
is
night.
this correct, Lisa? Is
I've-
this-
So
I don't
how-
think
how
how about
correct.
we wait to input?
All right,
Well, I think
you know,
it's a
never
good
mind.
exam- it's a good
But
example.
let's wait into input. Okay, go ahead. Go ahead.
It's not, we're reporting from an internal control standpoint, it's
So, but we'll just we'll
Right.
talk about it afterwards.
right. So that goes into the overall, implementation of making exceptions, and it can all be made into part of the policies, right? So certainly, if there's a leak, it's got to be addressed. Well, okay. Yes. Okay, and the last new comment that we have this year has to do with the student clubs, the extra classroom activities fund. This year we tested cash receipts and cash disbursements. We did, student participation is for the most important, because these are student money. You want evidence that the students had participation in determining how the money was spent. And so in this case, we did within our audit sample, saw that one check request form did not have the student treasurer's signature. Okay, sometimes, we've heard it from faculty advisors, very hard to chase down the student treasurer for their signature. It is an isolated instance within our audit sample. And then there's another instance where a purchase was made by the faculty advisor. It was shipped to a home address rather than a district address. It's just, it's just the appearance of it, right? You don't want purchases made for district business, or in this case, student club business, to be sent to anything other than a district office. So just a reminder for when the central treasurers receive the information, the documentation from the student clubs, that would be the first line of defense for the central treasurer to call them out. Hey, I see this payment check request, but this is not the high school address. So, it really is just about staying on top of faculty advisors, making sure that they're following district policies as well as New York State guidelines.
I'm just curious, was training provided for the advisors this year?
I think it's 3 times she did it. She did it 3 times.
She did.
Yeah,
Okay,
yeah.
thank you.
It's not an easy area. Faculty advisors, sometimes turnover. Sometimes, as they said, it's hard to chase down students. Sometimes it's, they just didn't think about it. I bought them from Amazon. It's shipped to my home.
Thank you, Alan, for your presentation. Does anyone have any other additional questions at all?
No, That was very thorough at this
Right.
time. Thank you.
You're welcome.
Thank
You're
you.
welcome. So just procedurally speaking, I know I'm way over time now. I apologize. So after this meeting, the audit committee is supposed to then make a recommendation to the Board of Education, which is of course yourself, whether or not to accept the audit report. So after this meeting, I'll go back to the office. I'll finalize these financial statements. I'll ask Dr. Talbert and Ms. Palazzi to sign what we call the management representation letter. Once we receive that, we'll release the report. Then Ms. Palazzi is free to file the report with the SED. The state has already said that prior to the board formally accepting the audit report by a board resolution, the district should submit the report released by the auditors to the SED. Okay,
So that will happen by the 15th then?
by
So we'll-
Friday,
so we'll
correct.
meet the deadline.
Yes, correct.
Thank you, Alan.
You're welcome. Thank you again for your time.
So as Alan just stated, the resolution will be at the next meeting because we don't have, they can go ahead and submit the report without the resolution. So it's fine. All right, can I have a motion to adjourn the audit committee at 7:49?
So moved.
Second.
Carol Seehoff is first, Chris Neer is second. All those in favor?
Aye.
Aye, motion carries 6-0. I'm going to resume the open session at 7:50. Resume open at 7:50. Any community input regarding the agenda items? Seeing and hearing none. Everyone at the table has the district clerk contract amendment. Just kind of pull that out. All right, so I'd like to make a motion. Does everyone have it in front of them?
Yes.
Yeah. I'd like to make a motion to amend the agenda to add agenda item 2C1, please, which is a resolution for the district clerk contract amendment.
Make a motion. Second.
Winnie Canestro first, Carol Seehoff is second. All right, so discussion on this item is that it's a resolution just to amend the contract for the district clerk, Einley Beckon, to extend to the contract through December 31st, 2024, and authorizes the board president to execute said contract amendment, right, as we still look for our district clerk.
I just want to comment that I appreciate Eileen staying on, coming on when we needed somebody and continuing till the 31st and helping the district and the Board of Education. So thank you.
All those in favor?
Aye.
Aye, motion carries 6-0. Can I now have a motion for agenda item 2C1, please?
Motion.
Chris Neeren is first,
Second.
Carol Seehoff is second. All those in favor?
No,
Oh,
no,
no, I-
discussion?
Any discussion on it?
So this we just got a 136-page change order.
No, I'm still on the district clerk contract on 2C1.
Approve that.
No, that I had to add it to the agenda. So we added it.
Oh,
Now it's a
okay.
motion. Yeah, yeah.
Okay, sorry.
Yeah, this is 2C1. So,
Okay,
so the motion for agenda item 2C1. So I got Chris and Carol, all those in favor?
Aye.
Aye.
Aye, motion carries 6-0.
Thank you.
Now I'm up to agenda item 3C1. Can I have a motion for agenda item 3C1, please?
So moved.
Second.
Winnie Kneshel is first, Chris Naren is second. Discussion on this item.
Okay, so we just got a 136-page change order document at 5:15 by email, so I would like to request that we have an opportunity to actually read it before we go ahead and approve it, so maybe we could table it since we have another meeting next Wednesday.
And I believe the recommendation was to have the architect review that before voting on it.
So, Dr. Talbot or Ms. Watsi, what would be the ramifications if we do not vote on it tonight? And how long would it take if we do need the architect to review it? So,
Well, Honeywell gave us, a timeline to comply with. I think this is something that we have to discuss with council. He's already sent the same change order to fiscal advisors to start the RFP process to finance the energy performance. So it means that I have to hold that immediately if this is not approved.
so is this the change order that went to SED?
Yes, this is the change order that went to SED. He was on it the whole weekend, and it just got approved today.
All right, so the reason that we just got it today was because SED had it and we were waiting for their approval.
Correct.
Okay.
I didn't read it that this had already gone to SED. The document that we receive is like our agreement with Honeywell, no?
Yeah.
That,
So
You- you
and there
read
was nothing in
page-
the emails that said that
that is a change order from SED.
we are changing our contract with Honeywell to
Uh-huh.
deduct scope,
Uh-huh.
and then Honeywell is going to send it to SED. So why would they send it to SED already?
Well, if it's going to be a deduct change order, it has to go to SED.
I
And
understand,
SE
but
yes.
why would they have already sent it to SED if we hadn't even seen it? So that doesn't sound right. I don't think you meant to say that it was
No, they-
actually sent
go ahead.
to the
Go
state
ahead.
education department.
Well, when they decided to remove Northeast from the scope,
Yeah.
that was what it meant that, they have to have a deduct change order. And the deduct change order had to be approved by the state. So once he got the impression that Northeast had to be removed from the scope, he went ahead and submitted it to the state for the deduct change order.
So the only, go
So-
ahead.
I don't think we could get into legal advice, but we
Correct.
have received a memo which is conflicting with that.
Yes.
You all right? You good?
Yeah.
Okay. So there is conflicting information with that. So, there is a recommendation to have the architect review it first. Being these 136 pages, we have to do our due diligence and we have to abide by our responsibilities. I would ask that this be tabled to provide, the board, ample time to review it. In saying that, I will say that Honeywell was very cooperative with this, with the change order and removing this scope of work, and just reducing this. So I think that they were so agreeable and so quick. And them understanding our elected role and our due diligence, I would have a hard time believing that they wouldn't, just allow us to extend it a week so we can, read it. I would make a motion to table this.
Go ahead, Dr. Talbot.
Just wanted to point out that the board had given consent for our legal to move forward in having the conversation with Honeywell about the change order number 2, and then the timeline came out to the board thereafter, indicating that these are the proposed dates that we are to follow. If we do not follow those, based on the holiday schedule, it will take us into 2025, and there's no guarantee that the price will not change on the existing contract. So that's why a series of emails was going out regarding the November 12th meeting to ensure that we could bring the resolution just to formalize what the board had already given consent to. And then we had requested the change order so that the board could have the change order to actually see it. So that's where we are today, and that's why we were bringing it on the 12th.
And we just got it back from SCD today.
Uh,
I'm just.
I want to say that I understand what Dr. Talbert's saying. We did authorize them to go ahead and ask Honeywell to remove this scope of work. However, there is a memo dated today that says to have the architect review it. I'm going to, again, ask that we table this and then vote on this next week, so we have ample time.
So, so right now on the table, we have the motion for the change order. I got a first and I got a second. So what I'm gonna do I'm gonna act on that in terms of people voting. And depending on how it goes, and from that point, if we have to table it, then we'll table it. Okay?
I thought that it's an intervening vote.
Go ahead, Chris.
Can somebody just clarify what's the risk if we don't vote on this today?
Like Dr. Talbot said, if we do close the lease and it goes into the 2025 fiscal calendar year, what he's saying is that there's a possibility that the equipment that we are leasing through this process, he cannot guarantee that the cost will be held the way that he had planned. That's all I have.
But if we push the vote back for 1 week, is it gonna really have that much of an impact that it's?
I
into
don't
next year?
know that, yes.
Based on our conversation with him, he just could not guarantee it. So
But
based on the
we've heard that
memo
before.
that
let him
came
finish.
today, based on the memo that came today, with the recommendation to have the architect review it, you know, that's the recommendation from legal.
Okay, so at this point in time, the motion is on the table. Right, so.
But Lisa,
Well,
isn't
let-
there an
let me fin-
intervening
let-
vote?
Let me finish,
maybe?
let me
Okay.
finish. Right now, there's a motion on the table for the change order, right? So I also have another recommendation motion that came forward that would like to rescind this motion and to table this item. So I will entertain that motion for rescinding the motion for 3C1. So is there a motion to rescind item 3C1?
Motion.
Second.
Right, so that's Wendy Kneshels first, Chris Naren is second. All those in favor of rescinding this motion?
Aye.
Aye. So that's it's Wendy, Megan, Chris, and Caroline, right?
Carol.
And Carol?
Yeah.
All right, and I'm a no. So the motion passes 5-1. Mhm. So can I have a motion to table agenda item 3C1?
Motion.
Second.
So Chris Neron is first, Wendy Canestro is second. All those in favor?
Aye.
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 I'm a no. So the motion carries 5-1.
Can we ask Ms. Fitzwatsy to have the architect review this change order, please?
Yeah. And remember, the architect is not district architect. This is the architect that was appointed by,
It's not H2?
no, it's not H2.
I think the memo that we received today indicated the district architect, H2M.
All right, so they'll look into it and have the architect follow through.
So can we act on this first thing tomorrow morning and
Yes.
express the urgency? Thank-
I think
Yeah, it does say district architect.
Right, so they'll address it tomorrow, correct? Okay.
Okay.
All right, any old business, any new business?
I just have a question about the budget committee. They're meeting tonight for the first time. We're pretty excited about that. We're glad to see, I think it's a step in the right direction and the community wants to be involved. I think that's a positive. There was a memo that two board members may serve if they want to. I don't know why, I think that was added at the end. Originally, they were going to be advisory and then make a recommendation to the board. But I did want to address that because I don't think the board discussed amongst themselves if anybody wanted to be on that.
Does anyone want to be on the board?
I'm okay with them making a recommendation.
I don't have a desire to sit on that board.
We give a lot of time.
All right, so we won't have a board representation.
Okay, I just wanted to make sure we brought it in public. Thank you.
You're welcome. All right, any community input on non-agenda items? Seeing none, can I have a motion to adjourn the meeting at 8:02?
Motion.
Second.
That's Chris Neeren is first, Carol Seover second. All those in favor?
Aye.
Aye, motion carries 6-0. Thank you for coming out.